$100,000. That's the number that keeps popping up in personal finance books, podcasts, and videos. But why is it such a big deal? Why do so many people set their first investing goal at this six-figure threshold? $100,000 isn't just a round arbitrary number. It's a milestone with significance that changes how your money works, how you feel about finances, and how quickly you can build wealth. Reaching $100,000 in investments is one of my goals before I turn 30, alongside paying off $127,000 of student loan debt. Today, I'm gonna break down exactly why 100K matters, talk about my 5-year plan to reach this goal, and share my own investing journey after about a year of actively investing. At the end of this video, you'll have some actionable steps to take and understand why it's worth the effort. Before we get too far into the how, let's take a second and talk about the why. $100,000 feels like a mountain to climb, but it's also an important milestone in wealth building, and here's why. First, when you're starting out, returns feel tiny and they're not very meaningful. Say you have $5,000 invested at 7% return, it's gonna be $350 in a year. Really, that's less than a car repair or a month's worth of groceries. But at $100,000, that same 7% growth is $7,000 per year. That's all money that you didn't earn from your paycheck. And if you continue contributing, the snowball effect compounds quickly, which is why hitting this milestone early is extremely helpful. $7,000 a year is significant, at least in my book, because this is also the contribution limit for your Roth IRA. At this $100,000 mark, momentum shifts from effort to automatic growth. In the beginning, every single dollar comes from your paycheck. It's money that you sacrifice and put towards these goals. But once you finally reach 6 figures, your money really starts to contribute and do the heavy lifting. Now it's an employee that's working for you 24/7 and never calling in sick. And sure, the market sometimes has bad days, but if you're in it for the long run, you are most likely going to see an uphill return. $100,000 is also a huge confidence milestone. Anyone that tries to tell you that emotions and finance have nothing to do together is just lying, both to you and themselves. Hitting 100K is a huge confidence milestone and is proof to you that wealth building is possible. At $100,000, this becomes real money in action and not just a theory. I can't speak from experience, but I can imagine that the confidence definitely makes it easier to keep going, stay consistent, and even take bigger, smarter financial moves. Another thing is that with investing, the more you have, the quicker it is to get to the next point. For example, it might take you 5 years to get to $100,000, but from $100,000 to $200,000, that might only take you 3 years. The more money you have working for you, the less time it takes to jump between these goals. Having more money changes your relationship with money. At $1,000, you worry about emergencies. At $10,000, you feel some relief, but realistically, you couldn't cover anything meaningful. $100,000 starts to give you some financial freedom. It's likely that you're not planning to touch this money, but if you really desperately needed it, it's there. You can stress less about daily expenses and start making financial decisions from a position of strength. That's the power of early investing. It's that the money works harder than you ever could on your own. So how do I actually plan to reach $100,000 in 5 years starting from zero? Let's break it down from the beginning with conservative numbers. When I started, I had about 5 years to reach this goal. So if we just go ahead and assume a 7% annual return to account for inflation and slow market years, then in order to hit $100,000 in 5 years, I would need to invest about $1,450 a month. So let's take a look at what that looks like year by year. At the end of year 1, I would have contributed $16,800 and my balance would be around $17,500. At the end of year 2, I would have contributed a total of $33,600 and my balance would be around $36,000. At the end of year 3, I would have contributed $50,400. My balance would be around $56,000. At the end of year 4, I would have contributed about $67,200. My balance would be around $77,000. And then at the end of year 5, I would have contributed $84,300 and my balance would be around $100,000. So the key insight here is that of the $100,000 invested, $84,000 would be my own money and $15,700 would be purely from the growth over those 5 years. That's what's really cool about investing, is that your money is making money. Now, if you've been following along, then you know that I have not been investing $1,450 from day one. In fact, I'm about a year and a half in and I'm still not at this number. Let's break it down. For the first 3 months, I focused on debt payoff entirely. Then for 3 months, I contributed 4% of my income to my 401k and received a 2% match, totaling about $400 a month. At the start of 2025, I began maxing out my Roth IRA at $583 per month, meaning as of right now, I am investing about $1,000 per month. Basically, I am not investing $1,400 a month, but I'm over a fifth of the way through my 5-year investment plan. Ultimately, for me, progress means more than perfection. Every dollar invested compounds, and I can increase contributions as my income grows or my expenses shrink. Naturally, investing more on the front end would mean I would have to invest less in the long run, but my goal does not necessarily mean invest as little as possible to get to $100,000. I'm juggling a few things at once. And one of those things that I'm juggling is paying off my 6-figure student loan debt. I do have a rather lofty, but I think achievable goal of completely paying off this debt by the end of 2026. In order to do that, I'll have to pay off about $75,000 in 12 months. To be clear, I make $76,000 a year and I still have to pay for my living expenses. So how I'm gonna do that is a whole different video. If I'm able to achieve this debt payoff goal, that'll leave me with about 2.5 years to get my investments to 100K. And I should have a starting balance of $20,000 to $25,000 invested at this time. Once my student loans are paid off at the end of 2026, I'll need to invest roughly $2,160 per month for 2.5 years to reach 100K invested. At the end of year one, with a total contribution of $50,900, my balance will be $53,500. At the end of year two, with a total contribution of $76,830, my balance will be $83,970. And then finally, my balance will hit $100,000 after another 6 months, and I'll have contributed $89,800 with a return on investment of $10,200. This means by not investing aggressively in the front end, I'll have to invest $5,000 of my own money that I wouldn't have had to invest if I had started off investing strong. Now, considering that I am currently putting $2,000 of my own money to debt in addition to investing about $900 a month, this plan should be realistic for me. That is, if I can pull off paying off $75,000 of debt in 12 months. So go ahead and subscribe to see if I can get that figured out. Now let's circle back to that original $1,400 a month. If we didn't have compounding growth, it would take almost 60 years of savings to reach $1 million. In 60 years, $1 million will be worth a lot less than it is now. Because we have compounding growth, if I continue to invest just $1,400 a month, it would only take me 23.5 years to reach $1 million and 30 years to reach $2 million. That's not too shabby. One reality is that investing requires extra cash. First, you have to prioritize your survival, your safety, your ability to make income, and then you can focus on your future savings before discretionary spending. Realistically, if you are just making ends meet and don't have extra money to spend on yourself, you also don't have extra money to spend on your future. Wealth building isn't a slot machine. It's not something that's accessible only to people with millions of dollars a year, but it is something that you do need extra money for. Assuming your survival and safety are taken care of, you can free up a few dollars a month to start investing. In order to do this, start by tracking every dollar you make and spend. You might find that you aren't getting value out of some subscriptions, a little bit of eating out, or some impulse purchases, and you can cut these to free up money for investing. Even $100 or $200 a month freed up to invest can turn into thousands of dollars over a few years. Another tip is to set up automatic transfers so that your investing is just happening automatically. 401ks work really well for this because the money is taken out before tax, so you don't even really notice it leaving your account. If you haven't been investing and are counting on every dollar or not sure where you would cut expenses or not willing to cut anything, great time to start investing is when you get a raise. Let's say you get a 3% raise, just start contributing 3% to your 401k and you won't even notice a difference. With that, start small and then scale up. Don't think it's an all or nothing approach. Any contribution is a good contribution, and even small contributions compound over time. Seeing your money grow will also make it a lot more motivating to invest. Increase your contributions when you get a raise, a bonus, or any side hustle income. And then the biggest thing is that you just need to stay consistent over time. Market up and downs don't really matter if you're a long-term investor. Consistency beats timing the market almost every time. Investing regularly is something called dollar cost averaging, and the goal here is that by investing at regular intervals, regardless of the share price, you reduce the cost per share over time and lessen the impact of market volatility or how much the market goes up and down in price. If you want to get started on aggressively investing, here are the steps that you need to take. First, review your budget. Find money that you can consistently invest, whether it's $10 or $100. Try to automate your monthly contributions. Next step will be to increase your contributions whenever is possible. Finally, be patient and watch your money grow over time. Remember, it's not about getting rich overnight. Any get-rich-quick scheme is a scam. It's about making consistent, smart choices. Start today because even small steps matter. The earlier you invest, the bigger your advantage. But if you're already later on, that doesn't mean it's too late. It's still earlier than if you started later. So finally, let's look at exactly what I have invested right now. As you know, I have two investment accounts. One is a Roth IRA and the other is a 401k. In my Roth IRA, I have $6,441. In my 401k, I have $5,819. This means that I have a total of $12,260 invested after 1 year of investing. My goal is always to empower you to use your money to build a life you love, instead of just buying what you think you should. Tag along to see my progress, and I'll share everything that I'm learning as I go, and I'll see you in the next video.